China has reported a double-digit plunge in exports and imports in July. The worst export performance in 3.5 years prompted renewed calls for more government stimulus. Chloe Fong reports.
With high interest rates overseas curtailing consumption and internal demand remaining weak, China's exports and imports tumbled in July, missing market expectations. Exports plunged 14.5% to $281.7 billion from a year ago, marking its worst decline since February 2020, when the COVID pandemic started. It was also the third consecutive drop, following the 12.4% contraction in June and a 7.1% decline in May. Imports in July contracted 12.4% to $201.1 billion. That was nearly double the 6.8% slide in June and almost triple the 4.5% decline in May. It was the steepest decrease in 7 months and was much worse than a forecast of a 5% drop. The figures left China with a trade surplus of $80.6 billion for July, compared with $70.6 billion in the previous months. Shipments to the Southeast Asian group ASEAN, China's largest trade partner, dropped for the second consecutive month, declining by 21.4%. Exports to the European Union, Beijing's second-largest trade partner, fell 20.6%. Consignments to the United States, its third-largest partner, dropped 23.1%, but its trade surplus with Washington rose to $30 billion. China's imports from South Korea, Japan, Taiwan, and ASEAN plunged by double digits. On an industry basis, labor-intensive products, particularly clothing, footwear, and masks, continued to see a slowdown in shipments. Exports of suitcases and mechanical and electrical products declined by 12%. Chinese imports of crude oil and integrated circuits, meanwhile, fell by around 17% to 20%. Chloe Fong, HKIBC.